Namaskaaram guys, this is Nishanth Reghunath here and welcome to a new video. Now we'll be learning about one of the most important heads of income from this video onwards. So this particular module will cover everything and anything related to your third head of income, that is profits and gains from business and profession, PGBP in short. Now what I want you guys to keep in mind is, out of all the heads that we're learning, this is easily the most important head. The reason why I'm saying so is because, number one, this is applicable for both intermediate and final per se. So a student who's currently pursuing your intermediate right now, you'll be learning this as a part of your heads of income. But please do keep this in mind. Whatever you learn for PGBP at the intermediate stage is applicable for your final stage as well. No other head has such a correlation between the topics in intra and final. PGBP is the only topic in the whole syllabus of direct tax. Not just PGBP, I wouldn't say PGBP is the only one. There's actually PGBP, TDS, total income computation, and capital gains to an extent. But out of the heads, PGBP is the most important head, which is applicable for both intermediate and final level. Alright, that is point number one. Now point number two. If you look at our examination pattern or the questions from our previous examinations, you will find that the head from which questions having the most value in terms of marks appear is PGBP. The head from which the most value questions come is PGBP. A close second for the intermediate level would be salaries, house property and capital gains together. Okay, but PGBP ranks number one. So if you look at the last, say, 8 to 10 years or 8 to 10 exams that happened over the last 4-5 years, undoubtedly you will find PGBP ranks the highest in terms of the most value questions asked. Alright, yeah? So due to these 2 points, it's very fair to say PGBP is the most important head to learn. Alright, so if you are a final student watching my video, please do keep in mind, you might notice that certain items, say for example, if I take you to a particular area under PGBP and the sections are from say A to C, I'm teaching only A, B, C in that particular video. But you see from your syllabus, you see from your study material that you have D, E, F as well. You will have those videos as another part. Now the reason why I said so is because I am taking the common topics that are applicable for both inter and final together. Now the reason why I'm doing so is because the intermediate students get a deeper analysis. Now all the analysis I'm giving right now will be purely on the basis of the understanding that is required for a final student. So everything I'll be explaining it over and beyond than what is required for an intermediate student. But don't worry, that is not going to burden you. That is only going to make your conceptual clarity better if you are an intermediate student. Alright, so instead of giving you just one example, I might give you 5 examples. Yeah? So listening to those 5 examples will make you understand the topic even better if you are an intermediate student or a final student. For final students, I would say it's mandatory to watch all those 5 examples itself. Yes, yeah, so you get the idea, right? So to give you a quick introduction to the chapter, PGBP, now before going into the technicalities of the chapter, let me give you a story. I'll give you a short story kind of introduction. Okay, why is in the scrolling? Yeah. Yeah, PGBP. This is our head. Now what do we learn here? We learn the process of income computation of a business or profession. PGBP stands for profits and gains of business or profession. So compute the income of a business or profession. The income of a business or profession comes in the form of profit or gains. Now, this profits or gains will be prepared or will be computed by an entity in their financial statements like P&L. Yeah, they prepare their P&L and find their profit or loss, whatever it is. Now, what income tax is saying here is, we can't accept this profit. That's what the IT department, the Income Tax Act says. The reason is because you prepared your P&L as per the accounting laws applicable. As per the accounting laws applicable. Now, if you look at our laws, the preparation of profit might not be the same. I'll give you a quick example. Say, This is Mr. Arjun running a business of cloth manufacturing. Clothes. He's running a business of clothes. He has a textile shop. Well, there'll be a textile business. Textile business. Okay. Now this is his showroom. And adjacent to the showroom, he has a 1, 2, 3, 4 godowns. These are godowns where he stocks his finished goods. He stocks his inventory. Okay. So his business, as per the memorandum of association, is textiles. Dealing in textiles. Selling textiles. Now, out of the 4 godowns, this is occupied by him, this is occupied by him, this is occupied by him, but this is vacant. This one is vacant. The 4th godown is vacant. So this is his friend John, who has a shoe business. Shoes, footwear business. Now John has 2 godowns, both of which is occupied. But unfortunately, John wants to have one more godown, but he doesn't have the resources for the same. He doesn't have access to the same. So John contacts Mr. Arjun and asks, dude, your godown is vacant. Your godown number 4 is vacant. Can you rent it to me? I will pay you, say, a rent of whatever, like we can agree upon, say, 20k per month. So Arjun's like, yeah, why not? I have a godown that is vacant. If I rent it to him, I'll get 20,000 a month. So Arjun's like, sure man, I'll rent it to you. Okay? So John agrees, Arjun agrees, and now Arjun is receiving 20,000 per month as rent for his godown. Now if you look at Arjun's P&L, say, let this be a rough depiction of Arjun's P&L. Okay. If you look at Arjun's P&L, he has revenue from operations, which is the textile business, say for like 20 lakhs. Then he has his rental revenue, that is non-operating revenue of 20,000 per month. So for a year, it's 2.4 lakhs. So his total revenue totals to 22.4 lakhs. Correct? Now here comes the issue that the income tax is going to raise. Now income tax will tell you, see Arjun, when you are computing your P&L, say, let me just give an expense as well. So his total expenses are 15 lakhs. Total expenses 15 lakhs. So the profits 22.4 minus 15, 7.4 lakhs. Now Arjun, this is what the income tax is going to say. Now Arjun, we can't accept this 7.4 lakhs. Now Arjun will be like, why sir? I did everything legally. I did proper calculation and there is nothing wrong in what I've done. But income tax will say, see Arjun, there is a small issue. This particular revenue, where is this from? This is from renting a building. Correct, you rented out a building, you let out a building and you received rent. Is this your business? Is it your business to construct buildings and let it out for rent? Arjun will be like, no sir, absolutely not. My business is to deal in textiles. So income tax would say, then is it fair to include this income in your business income? Arjun will be like, no, it makes sense. It shouldn't be my business income. But where will it go? So income tax will tell him, Arjun, go to section 22 of Income Tax Act, section 22. This covers income from house property. Now there you will see, if you have a building which you have let out on rent, any rental income received from that particular asset, that property, shall be taxable as income from house property under section 22. So rent from your godown will go to section 22 and not to PGBP. PGBP falls under section 28. It will not come under 28, it will go to 22. So your profit that you have computed, the 7.4 lakh profit that you have computed, we can't accept. Because this has an income which shouldn't have been part of your PGBP income. It should have been part of your house property income. Correct? So what we want to do is, we will not accept this. We will ask you to recast your P&L. Redo your P&L as per our rules. Now our rules for computing business income range from sections 28 to 44. So you go to all the sections from 28 to 44 and then compute, then recompute. You can either recast your existing P&L or do a completely new calculation from the beginning. So recast will be like, you take 7.4 lakhs as the base. You take 7.4 lakhs as the base and make necessary adjustments. That's it. So in this case, if I'm to recast, I'll take the profit of 7.4 lakhs, and there was an income which shouldn't have been part of business income. So you took 2.4 extra as income. So when your income is higher, that means your profit will be proportionately higher. So income went above by 2.4. That means your profit is above by 2.4. This 2.4 should be reduced in income. 2.4 is to be reduced in income. So your profit will be reduced by 2.4. Correct? So reduce this 2.4 from your profit. Incomes not PGBP. We'll call it as incomes not PGBP and reduce 2.4 lakhs. Take it out. So 7.4 minus 2.4. Now your profit will be 5 lakhs. Now same effect. If you take 2.4 from here, it will be 20 lakhs here. 20 lakh minus 15 lakh will give you 5 lakhs. That's all. Clear? So you need to recast your total profit that you have computed like this based on the rules that we mentioned from 28 to 44 and some additional rules. Okay? Now this is the complete concept of computing PGBP profit. Alright. Now, scroll past couple pages. Our whole chapter can be divided into multiple parts. See, the first, as I said, the sections range from 28 to 44. And the first section of every head of income will give you chargeability. Salary was from sections 15 to 17. House property was from, House property was from section 22 to 27. So for salary 15 to 17, 15 gave us chargeability. House property 22 to 27, 22 gave us chargeability. PGBP is 28 to 44, so 28 will give us chargeability. And whenever you are learning about chargeability, read section 28 along with section 41 and 176. Alright, just keep that in mind. So that is one part of our study. That is understanding what is PGBP income, what kind of incomes are to be taxed under section 28 as PGBP income. The next part of our study will be computation of that income. Section 29 tells us how to compute PGBP income. So section 29 tells us the general basis. To compute PGBP income, 29 says, go to sections 30 to 37, 38, 40 to 43 CA, and for final students, there will be some more additional sections here. Okay? So go to sections 38, 40 to 43A, and if you are a final student, some more additional sections for which you will have dedicated videos. So go to these sections and compute your income. That is what section 29 tells us. Now, besides that, there is another special way of computing your income, which is from sections 44AD to AE. Now, for final students, you will have more content than what is applicable for an inter student in this particular area. Okay. Now, the special form of computation is called presumptive taxation. Now, this has nothing to do with the general basis. These two are completely different. These two are completely different. No relation between these two. And for an examination point of view, you will have dedicated question either for a general basis calculation or a presumptive basis calculation for both inter and final. Okay. Now the computation part is done. Now we are going on to the third part where we learn about certain special provisions. In these special provisions, we learn certain rules regarding the accounts, books of accounts that you keep. Regarding the books of accounts. First, you learn section 44AA, which tells us who should maintain books of account and in what form. So I'm running a business. Do I necessarily have to keep books of accounts as per the income tax rules or not? That is what 44AA tells us. Now 44AB tells us the most important part regarding PGBP with respect to work point, practical aspect point. That is tax audit. Who should get their accounts audited? Who should get their accounts audited? So 44A tells us who should maintain accounts. 44AB tells us should you get the accounts audited as well. So this is the complete structure of our study. Okay. So to quickly summarize our syllabus, we have PGBP, and under PGBP, we learn about the complete head can be broken down to three parts. Part number 1 is chargeability. Part number 2 is computation of income. So this looks like a pokeball. And part number 3 is special provisions. Okay? Now under chargeability, we learn about sections 28. Sections 28, which is to be read along with 41 and 176. Under computation of income, we learn about two things. We learn about two things under computation. Let me just zoom this out a bit. We learn about two ways of computation, and they are, number 1, your general basis as per section 29, and your special basis, that is presumptive taxation, as per sections 44 AD to AE. Now do keep in mind, final students will have a bit more than intermediate students to learn in both these areas. But section 28, 41 and 176 chargeability will be the same for an inter and final student. Okay? Now these are the two things we learn under computation of income. Now what does section 29 tells us? When you compute your income, check sections 30 to 37 for deductions allowed. Now what it says there is, when you are computing your P&L, what all are the things that you can take as expenses, what you can actually deduct from your revenue. See, here we took 15 lakhs as expenses, right? We took in our expense column an amount of 15 lakhs. Sections 30 to 37 tells us what all out of the items that you have taken in 15 lakhs are actually allowed. Okay? Now, sections 40 to 43 CA, generally for a finance student you might have additional sections here. You will not, you might have, you will have. They tell us what are the disallowed expenses. As in, say out of those 15 lakhs items that you have taken, there are like 10 items. 7 items are allowed, 3 are not allowed. Now 3 that are not allowed, you will understand from the reading of sections 40 to 43 CA. Okay? Presumptive taxation is nothing but taxation by estimation. Taxation by estimation. That's what presumptive taxation tells us. Now finally moving on to special provisions. What you learned here, what we learned here is special provisions regarding books of accounts. Who should maintain books? Section 44AA. Maintenance. Maintenance. And 44AB. Audit. Now this is the complete syllabus of PGBP. Clear? Pretty simple, right? Now that's all that I wanted to communicate with this particular video. I hope you got a good understanding of the concept of the things that you are going to learn in this particular head. Now I repeat, you get a good understanding of the concepts of the things you are going to learn. So you understood the concept of the whole chapter, right? Now with the next video onwards, we will start breaking down this chapter part by part by starting with section 28, that is chargeability, with the next first one. Alright. So I'll see you in the next video. If at all you have any doubt with what you heard in this video, do let us know. As you know, we have a team which is dedicated to making sure that your experience of learning tax with us is the best. With that said, I'm winding up this video. I'll see you in the next one. Till then, tata, take care and goodbye. This is Nishanth Reghunath signing off.